Adobe reported second quarter earnings June 13th. Their record revenue of $5.3 billion topped analysts' estimates of $5.29 billion. The market set the shares up $67 or more than 14%, and the stock has kept moving higher despite a Federal Trade Commission into termination fee practices and Adobe possibly using its customer work to train its AI. As mentioned, Adobe's revenue was $5.3 billion. That was up 2.5% sequentially and 10% year over year. Gross margins were a solid 88.7%, slightly better quarter on quarter and year over year. Operating profit was almost $1.9 billion, up 107% quarter over quarter and 16% year over year. That's about 36% operating profit. The large quarterly jump was attributed to a $1 billion fee Adobe incurred for the canceled merger with Figma in Q1. Net income was almost $1.6 billion, better by 154% sequentially and 22% year over year, which is almost 30% of revenue. Turning to our quarterly income statement bar chart, we can see that Adobe has been steadily growing since Q2 2022. We can see the dip in operating profit and net income in Q1 from the Figma charge, but if you back out that one-time charge, we can see the smooth and steady growth in those line items. Net revenue has been growing by over 2% on a quarterly compound basis, gross profits by 2.3%, operating profits at 2.4%, and net income by 3.3%. Solid, steady growth. Looking at revenue by segment, digital media in blue is Adobe's principal business, earning $3.9 billion and growing by 2.3%. Digital experience, shown in red, reported $1.3 billion, and that too has been growing slightly better than 2% for the last 9 quarters. Their publishing and advertising business has been struggling, however, though just a fraction of overall top line at $74 million. A closer look at their digital media unit is Document Cloud in red. Their smallest segment has been growing by 3% to earn $780 million this last quarter, while their creative segment reported $3.1 billion, growing 2%. Revenue by geography puts Americas as their biggest region by market share, reporting $3.2 billion this quarter, growing 2.6%. EMEA reported nearly $1.4 billion, growing 1.8%, and APAC, their smallest geography, reported just $760 million, expanding by 84 basis points these last 9 quarters. Let's look at some ratios. Shares outstanding were down by 5 million. Earnings per share was a solid $3.49, up 156% sequentially and nearly 24% year over year. Sales per share were $11.80 at 3.6% and 12.2% respectively. Cash per share also grew to nearly $17, up 24% quarter over quarter and 43% year over year. Book value didn't change much, standing at $32.91. Adobe's PE is close to 40, with the S&P around 28.38. The PEG ratio at 11.97 suggests the earnings aren't growing fast enough to justify the PE. The leverage ratios have the debt ratio at 0.14, debt to equity at 0.28, and interest coverage at 45 times. Liquidity ratios look good as well. Current ratio above 1 at 1.16, quick showing 1, and cash at 0.81. Return on assets of 21% and return on equity at 42%. Very good. Adobe has an equity multiplier of 2.02. Return on capital employed was 30%. Return on invested capital is 24.8%. Adobe's effective tax rate is 21%, giving us a NOPAT of $4.9 billion with an average debt and equity of $19.8 billion. Looking at the cash flows, operating cash flows were actually lower to $1.9 billion last quarter. Investing inflows reported $111 million, and financing outflows posted $642 million. Free cash flow to the firm was up 40% to $7.6 billion. Very solid indeed. Adobe doesn't pay a dividend. Their enterprise value is $247 billion, which is 11.6 times revenue, 12.81 times EBITDA, and 32 times free cash flow. The company provided guidance for the full year and the next quarter with revenue between $5.33 and $5.38 billion in Q3, giving us, by our estimate, of EBIT around 35.5% and earnings per share of $3.45 to $3.50, takes us to a forward PE of 40.4. Takeaways from the Adobe report are the continued solid gross margins, steady and constant growth, lots of cash. Instead of paying dividends, the company is buying back shares. Adobe is participating in the generative AI boom with an uptick in revenue. On the con side, we thought the price earnings multiple was rather large with respect to the market, though a premium stock does command a premium price. We're hard pressed to find anything else wrong with Adobe. though perhaps the FTC investigating Adobe's cancellation practices and its recently updated terms of service agreement that suggests customers' work will be used to train Adobe Firefly when your work is placed in Adobe stock market. This approach to customers might damage their credibility and trust. That being said, along with their high PE, we are giving Adobe a neutral rating. We have no exposure to this company. Like and subscribe.